Hello everybody, this is Dare here. Hope you're well. Today is about scalping forex. I've received number of requests to do a video on how we can scalp the forex market. So I've chosen a particular tool called the currency strength meter to achieve our objectives. So we want to scalp the forex market with this indicator. So what is the currency strength? If you don't know what currency strength meter is, don't worry, we will talk about it now. So we'll discuss what currency strength is, how does the currency strength meter work, how can this help you, how often is the meter being updated, and we give 3 good examples of a live trading using this currency strength meter. Okay, first question is, what exactly is currency strength? Okay, analyzing the forex market using a currency strength meter or indicator has become a popular forex trading strategy. Instead of focusing on forex pairs, just like euro dollar or pound dollar, currency strength focuses on the underlying currency itself, like euro, USD, GBP. This information is very useful because it directs the trader attention to the group of forex pairs in play at any given time. It works because related forex pairs are correlated. So you see, these are the major currencies. You have the US dollar, the Australian dollar, Canadian dollar, and so on. And all of them are interrelated. So what currency strength is trying to do is to pick euro, for example, and find the relationship, the strength between euro and the remaining pairs. So it will compare the strength of euro to what the strength of Japanese, GBP, and so on. And it will come, the meter will show you a number. It's between 0 and 10. It shows you 7 or 4 or 3. That is the strength, or 3.5. That is the strength of euro at the time. Okay, it does the same thing to Japanese yen, British pounds, and the rest, and it will give you a figure. Okay, so if the currency strength of the euro is very strong, then there will likely to be a strong move on all euro related pairs. So let's say currency strength for euro is very strong. Let's say it is 7 or 9. So everything to do with euro will be rising against almost all the pair, depending on the strength of that pair as well. So we expect euro to rise against some of the pairs that are weak. Okay. However, the algorithm used to calculate currency strength is a little complicated, so we are not going to go into how to calculate it. But in simple terms, the strength value is calculated by measuring the relative move on a group of forex pairs associated with that currency. Okay. So the currency data is displayed numerically or graphically. So it's up to you how you want to view this information, the data that is being calculated. In the next slide, you will see 2 types of how we can display this data. Okay, on the left hand side, you display the data by numbers, numerical. On the right hand side, you display the same data, graphical. So depending on your choice. So personal opinion for myself is I prefer to see it in numbers. It's easy for understanding, quick understanding. Here I will have to interpret each of these lines represent a currency, and I will have to see which one is on top of which one, and it might be a bit complicated, but here it's very simple. Okay, so you have the graphical type and you have the numerical type. Okay, let me quickly say that these meters, they are available online, so you can download all this online, and there's numerous of them online. Just Google for currency strength meter, and then you can pick any of the ones that shows up in your search. Okay, and they are calculated. They take reading from the last 24 hours to tell us what the reading is. So for example, it's showing us here that Canada is 7.2. Canadian dollar is 7.2 strong. So it means it's the strongest here right now. And Swiss francs is 1.6, which is the weakest. So you see, if you look at the other monitor, this is another monitor from another developer, is showing similar figure as well. Canada is the strongest and Swiss francs is the weakest. By the way, these were taken at the same time. Okay. Now, how can this help you actually? This information, how can it make any difference to your trading? Okay. It is a useful guide. It's a quick guide to tell you which currency you might want to trade and which might be worth staying away from. For example, if a certain currency is very strong, another currency suddenly turns weaker, you may find a trading opportunity. Okay, so you have Canadian dollar, as we said earlier, is a strong currency here, and Swiss francs is the weakest. What does that tell us? Canadian chef pair will be in an uptrend. So that's information that is going to help you right straight away. And the same thing, New Zealand versus Swiss francs will also be in an uptrend. Okay. However, these middle ones, because GBP Euro, for example, or GBP Japan, they are not as strong and they are not weak, neither weak. So they will be, if you play these two against each other, say GBP Japan, you know what will happen? They will be in a range. Okay. So this information is very, very useful. Actually, the deviation between the pair is also indicate momentum. For example, Canadian dollar is 7.2 strong and Swiss francs is 1.2. If you subtract 1.6 from 7.2, you see it's about 5 point something, maybe 5.6. We have the figure 4. Anything greater than 4, if the figure is greater than 4, the difference is greater than 4, it means those are pairs that will be in a trend. Okay, so for example, Canadian chef will be in an uptrend. New Zealand, if you take away 1.6 from 7, is still more than 4. It will also be in a trend. However, between GBP and Japan, 4.6 minus 4.1 is far, far less than 4. This is 0.5. So you will not expect them to be in a trend. Okay. So how often is the meter updated? It is updated every minute and it pulls data from the last 24 hours. So now let's look at example. We are going to look at 3 examples of how this works in live trading. So this is a chart taken today, and at the same time, this is the currency meter. Okay, Canadian dollar is the strongest and Swiss francs is the weakest. So if you buy the strong currency and you sell the weak currency, that means you are buying Canadian, you are selling chef. So Canadian chef, you buy Canadian chef pair. And as you can see, the whole day it's been uptrend. This is a 1 minute chart and it's been compressed a little bit. So it is, the whole day is being uptrend. So as a scalper, what you are looking for, having this information in your hands, you know Canadian chef pair is going to be uptrend. So you'll be looking for opportunity to buy into the trend. Any pullback, you buy. Any pullback, you buy. This is a news release and you'll be aware of that. Be sure not to trade when there's news release. I will talk a little bit more about that later on. So you buy into a pullback with 10 pip profit and 5 pip stop loss. So you continue to do this all day long, and keep on checking whether the strength has changed. So when Canadian dollar is no longer strong, you will stop trading. Okay. Let's look at another example. This one is New Zealand chef. So it's between New Zealand and Swiss francs. You can see that New Zealand also is strong. Not as strong as Canadian dollar, but Swiss francs is weak. So New Zealand versus Swiss francs. So we still see an uptrend, and still you use your same strategy and keep watching this. Make sure that the currency meter is still showing the currency you are trading as being strong. Now, the last example is between Japanese yen and British pound. Okay, look at the two of them. One is 4.86, the other one is 4.14. So you see there's not much difference in the strength. They are similar strength. So if you go for GBP Japanese yen, what kind of chart will you expect? Uptrend chart, downtrend chart, or sideways market? Okay, this is what you will get. You will get a sideways market. So this is the GBP Japanese yen, and you can see both of them are of similar strength. So the whole day long they will be doing this. And if you are somebody that loves to trade range band market like I do, I use Bollinger Band. Put my Bollinger Band here, and I will pick top and bottom with confidence, because I know this pair is not going to run away in a trend. Why? Because I know both currency are of similar trend. None of these two will go against the other one in a big way, except this meter has changed. So I keep watching this meter to make sure the relationship is still very close. So I'll pick bottom, top, bottom, top. I'll do that all day long. I got about 5 or 6 trades here that are going to be give me profit. So this is how it works, guys. And in conclusion, you will be buying the strength and selling the weakness. So you'll be buying strong currency, you'll be selling the weak currency. Well, as I said, this strategy is for short-term scalping. So you go in and out with profit. So set a realistic target. Make sure your stop loss is half of your target. If your target is 10, stop loss is 5. Lastly, beware of economic news. Okay, check factory.com for latest economic that is coming up, because economic news can have huge impact on the strength of any currency. A currency that is the strongest before the news can suddenly turn weakest. So beware. So have a look at Forex Factory and do not scalp around any big news release. So that is it, guys. Thank you so much for watching. If you like this video, can you just give us a thumb up and click the like button? Subscribe to us as well, and more videos of this quality will be coming shortly. So I'm signing off now. Is Dare.